One of the key things when you start a new business is how do you raise enough finance for it? Now, we did some research into this sector and we looked at new startups and we looked at whether they were able to raise enough finance initially or not. We found that in about a third of cases they couldn't actually raise enough money. Now, the majority of those went straight to their bank and looked purely at a bank overdraft as the funding option for their business. Now, this was often restricted or not available at all, and in these cases it led to a number of consequences for the company. Firstly, they were unable to pay creditors, they may have been unable to pay employees or even their tax bill. There are alternative sources of finance available, and one of those is invoice finance. Now, unfortunately, this was considered by very few of the businesses that we spoke to. In the majority of cases, that was because they didn't even know it existed. Those that did know it existed didn't think that they would qualify for it, so they didn't apply. Now, it is freely available, especially to start-up businesses, and there are companies that specialise in that sector. It works in a very simple fashion. If you raise your invoice on credit terms to another business, an invoice finance company will give you a percentage of that invoice value immediately in cash that you can use for any purpose. So it's really suitable for new startups, and the great thing is it also grows as your business grows. As you raise more invoices, so the more invoice finance becomes available.